Good afternoon, everyone. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you would please type the number one in the chat box so we know you can, I would appreciate it. Afternoon, Brenda. Hey, afternoon, Jim. Morning, Helen. Hey, Alex. Welcome, welcome. Andres, good to see you. Good afternoon. Yep, got it, Andrew. Uh, where is that GQ look? Yeah, it's coming. It's a coming. I always like to just get the audio working first and know it's easy to identify a problem if something doesn't work. It just makes it a little bit easier doing it that way. Let's see, probably should open up the lens. Ta-da! There we go. Ceiling fan going. It's a little bit humid today here. Hey, Kevin, good afternoon. Welcome, everyone. As we get started, keep in mind that everything we look at is for education. Nothing is meant to be advice or recommendations. If you find something you like, anything, make sure it fits your own personal risk profile and risk tolerance. All right. I'm hoping over the next couple of weeks to have some great news for everybody with something that we've been working on. Today is our next step for it. I'll be in the office doing some recording today, and we'll just leave it at that. But I'm excited. We're not normally in there on a Monday, but there's an interview going on today that's going to be smoking. So I'm looking forward to it. All right. Let's see. Here's our agenda for today. We're going to go through our follow us page and we're going to click on today's trades, which are your trades. I'm going to show what I've done so far today, what I've done recently, and they don't have to be today, something that you've done recently. So if you've taken a trade on Thursday, Friday, closed out a trade that you've been in for a little bit recently, that's what it's all about. Win, lose, draw, does not matter. Funded, non-funded, we consider everything non-funded. The idea here is you're sharing it with the universe. You're putting it out there because I read them all out loud. You're putting it out there that, hey, I'm doing this trade and it's working. You're becoming a better trader for it, whether you realize it or not. It's something that I make my one-on-ones when I work with them on specific trade setups and trying to find right entries and exits and so forth. So one of the things that I almost insist upon is trading partners and the like, somebody every day you're telling them what you're doing. We'll go through the economic reports. We'll take a review of the market. We'll look at upcoming trainings. We'll go through our weekly training topic, and then we're going to take a look at your candidates. Tell me more about your stock than just Apple. Tell me what it is you're thinking about, and I can analyze it better. And if you don't, if you just say Apple, I'll give you my opinion on what I see. But if you're looking at Apple thinking a bull put spread, I look at Apple and go, ooh, bear call spread. This way, at least we're on the same page. All right, here's our follow us page where you can follow along with all the latest and greatest out there. We're going to have to make these boxes a little bit smaller, and we're going to add another link in there. We have a brand new newsletter out. It hits the markets this week where we're opening it up to others. It's not even on this document yet. It's called the Trading Post. Andrew, did Sean give you a link for that? Did he send it over to you? You guys can register for it if you'd like. It's free. It comes out every day the market is open. There you go. Andrew dropped it in there. Go ahead and click on that, and you'll be able to register for it. Once again, it is a free newsletter. It's just one more piece of content that we're working on. You're going to start seeing now. Listen, if you are in or not in pop, it doesn't matter. But if you like the trade setups, we're going to talk about some of them today. But if you like the trade setups that we do in there, you're going to start seeing videos of every single trade that we take, win, lose, or draw. Every one of them is getting its own video and getting published on Facebook, Instagram, TikTok, Shorts for Reels, LinkedIn. Every single time we have them, we're going to have multiple, like there are 6 of them right now. I think 6 videos in the queue right now. We put a process together we automatically process it, drop it in a folder, and we do nothing else. It automatically publishes everywhere except TikTok. That one we have to publish manually. But everything will be done for it. The captions, everything is done for it. And you're going to start seeing those come out. So the reason I'm telling you this is follow along with us on the social platforms. Ring the bell on YouTube and ask for notifications. So whenever something does come out, you are notified about it. Facebook is one of the worst ones with that. Doesn't mean it doesn't work. It's just they're not very good when it comes to that. Our posts are only seen by 8 or 10% of the people that follow us. That's it. Most people never see the posts that we put out there. So you got to be looking for what we do. But this would be another way that you could follow along with what we do out there. And this is kind of a pre-market newsletter that comes out. And when that pre-market newsletter comes out, it's going to give you the details of what's going on today. What are we considering? What are we looking at? And so forth. So once again, just one more way to add value to you as a trader that you could take advantage of. All right, today's trades. What trades did you do? Drop them in. Whatever it is, win, lose, or draw, doesn't matter. Funded, not funded. I'm going to consider it a non-funded trade no matter what it is because it doesn't matter to me. I just want you hitting the enter button, and I want you doing it over and over and over and over and over again. I'm going to write a number on the screen. Actually, I'm going to ask you. No, I don't want to do it because I'm going to mess up all the trades that people dropped in. I'll just write a number on the screen. 3. That's how many non-funded trades. Yeah, that's a lie. I didn't do 3 non-funded trades. I did 30 non-funded. Yeah, that's a lie. That's not true either. I did 300 non-funded trades before I ever pulled the trigger. 300. And I did them in 30 trading days, which means I was doing 10 on average funded trades per day. 10 non-funded trades per day on average before I ever hit enter with real money. And you know what I was really good at by the time I got through those 300? Pop, 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 pop. Pumping around on that keyboard. I knew exactly what to do, exactly how to set up my stop, my targets, my GTCs, a trailing stop, an OCO, whatever it was. I knew exactly what to do. Why? Because I had done them 300 times in practice. Right? You close your eyes and you do it. Now, I'm not saying you have to do 300. This is what I did. You're going to do what best suits you. If you feel comfortable after 10, you go for it. Right? That is all on you. We're all adults. We all have to manage our own money. We're all responsible for our own money. Right? But that's just what I did. Was it hard? Yes. See, it was brutal. Since my wife were at the point of near divorce because of me taking this stock market education class that I did with the amount that I had invested in the training, which when we look back was nothing in reality. But what I had invested in that training, I had done so many harebrained schemes before, businesses I tried to start, vacuum cleaner sales, home automation systems, and construction, whatever else, whatever stuff I did on the side to make money. This was kind of the straw that broke the camel's back. She said, if you don't make this one work, we're done. Right? And it took me 30, 40 days before I got up and going and started to place a funded trade out there. And then life has just changed wonderfully since that point for us. So get some practice trades in. All right. Brenda, 20 minutes. How many contracts are you doing, Brenda? 77,000 on SPY today in 20 minutes. That's a lot of contracts. But congratulations. That's awesome. Jeff, NQ, 1 contract, 2 trades, 1.43 minutes total, $160.70 net. Nice. Very nice. NQ, for those that don't know, is the NASDAQ. That is E-mini futures. Alex said, I caught the pop on Amazon earlier, calls on IBM and PSW for about a 10% return on each. But KKR went against me. Ouch. Scalp on Broadcom for 4% return. But a Metascalp also went against me. The SPX SPY turned south. Oh, well. Currently barely up for the day at least. All right. But listen, Alex, look at the experience you just picked up on all of those trades that you did today. Right? Tremendous. So I applaud you for it. Hey, Kevin, went short Tesla last week. Sold this morning for 25%. There you go. Went long IBIT. Yeah, Tesla had a nice drop today. So you were on the right side of that one. Yeah, a lot of contracts, Brenda, 3,700. Wow. Trip said 25%. What did I miss? Oh, there we go. Yeah, I just got pushed quickly. Things went by really fast. So Trip had said small scalp on IWM, 25% in 8 minutes. Andreas said SPY puts this AM for 23%. Nice job, Andreas. Great. Great. Yeah, go Brenda. Exactly, Alex. You got it. All right, so let's show you first. So AMD today wasn't a big mover, but listen, it's okay. AMD, guys, here's the thing. You've got to be, I love Karate Kid. Okay. And do I like the movies? Yeah, I do. I think the movies are good. Do I like Mr. Miyagi? I love Mr. Miyagi. Okay. But I like Karate Kid for a much different reason. Mine and my wife's, or my wife and I, our song, I don't know if they do that anymore, but our song, our wedding song, our song we were dating is The Glory of Love. Right. So I love that part of it. And we watch the movie all the time because of it. Right. We went to see it 2 or 3 times in the movies. And Mr. Miyagi is one of my favorite though. Right. I love his phraseologies, best block, no be there. And some of those types of things goes right back to Yoda. Right. They're 2 of my favorite when it comes to psychological warfare that you play in whatever you do in life to try and win. Okay. And you cannot, if you are Mr. Miyagi and you're looking at your opponent, right, or Daniel-san, and you're looking at your opponent, Daniel-san was taught just because the guy is throwing his hand like this, that doesn't mean, or putting his hand like this, doesn't mean he's going to throw that fist. He may throw a kick, he may throw an elbow, he may spit in your eye. I don't know, but he may not do what you think. So you've got to be able to react that whatever that person does, you've got a plan in place for it. The market, the same thing. We set up perfect on Friday on AMD, or Thursday. Sorry, Friday was a closed day, right? Happy 4th, everybody. Hope you had a good one. So we set up with a bullish bias rank of 1. So what does that mean? Man, I'm raw to go. I want to take call options today. Well, market opens up and we're down. We gap down. We stretch up a little on the wick and we continue to push. Well, I don't want to take bullish trade today on this. Right? Not if I get a bearish setup. And what did I get? I took a day trade on a bearish setup. Now, here's the thing. If you know what you're looking at and you can identify potential moves, directional moves, how does that move set up for you as a trade right now, today? Right? So Mr. Miyagi's waiting for that punch, and all of a sudden it wasn't a right hook, it was a kick, right? So Mr. Miyagi's got to react to that. We gapped down today. I need to react. All right, so what happens? I put my hat on backwards, right? Turn it backwards, that's my downside direction. Hat facing forward is bullish, hat facing backwards is bearish, right? I'm ready to fight. We're going to go down today, right? On this position anyway. So now, does the setup happen? We gap down. Did we get a retest and a fall, or is this just a false breakout where we break back up to the upside? I don't know. Let's see. Let's go look at a 5-minute chart and see what happened at that 137.33 level. Here's 137.33. We gapped right through it. Well, on a 5-minute candle, I ain't got nothing. I am all the way through. Sucker just ran. Nothing I can do, right? Let's go look at a 1-minute chart. On a 1-minute chart, I'm going to scroll backwards a little bit. On a 1-minute chart, we gapped down. We ran up here. We closed. So this was 137.33. We closed here at 137.12. 137.12, 137.33, 12, 20, 21 cents. 21 cents away we closed. And what happened on the next candle? We opened up, we stretched up, and we failed. All right? Boom. The setup was there. So now it's an aggressive entry. Why? Because the S&P is still overall bullish. So I'm going against the trend. I'm not swing trading it. I'm day trading it. So as long as I'm doing it for the day, I'm okay. As long as my stop is set just on the other side of what is right now our resistance line, that fib line, I'm okay. And there's no way we got stopped out. My stop was up here somewhere. There's no way we got stopped out with that wick. And then it continued to press downward today, right? Did move down and ultimately bounce, right? That setup was an ideal setup for a switch play, right? Or a switchback trade, right? Where we were ready for a bullish trade, but bearish was already set up. There was nothing that precluded us from taking a bearish entry. Why? Because I had plenty of room to run. If we closed where we were, we moved up a little bit, retested and bounced. Perfect bullish entry. If we gap down or ran down, retest and drop, take the trade right on the other side there, right? Resistance, support is down at that 133. My target's at 133.5, 134, somewhere around there. We would set our stop just on the other side, somewhere on the other side of that 137.33. We would set the stop for the bullish trade. Blue is blue, right? We'd set the stop below the 137.33. Okay? So all of that, perfect setup. We got to a low today of 133.50. We're talking about 133.07, 133.50, 133.75, 134. Somewhere in that area is where your target is going to be on this. You don't have a lot of room in here. So 50 cents off of there, 50 cents off the bottom level. And I use round numbers of quarters when we talk. But if you're at 133.07, why would you not just go to 133.60? Right? Perfect. You got your 50 cents off of there. I just use the round numbers because it's easier than everybody having to do math. Right? We just round everything to quarters. For education purposes, it's fine. Let's see. All right. So good trade, in, out, same day, done. Trip said impressive, Brenda, and everyone else too. Good. And then Tripp said, "Do you ever look at the pre-market on stocks? AMD showed its down move around 8 o'clock." Yep, I saw it in the pre-market. Sure did. Um, Brenda said, "Thank you to everybody for the kudos there." Yeah, so without a doubt, and that's one of the major benefits, TradeStation TOS, right? You want to look at what's happening in pre-market. You want to see that setup in there, right? What's it doing? Does news get affected with the 8:30 economic reports? Right, very well could be. But overall, great trade today. Amazon was another one. We closed at a bullish bias rank of 2 on Friday. A lot of room to move to the upside. We got a quick move up on it, so we got the pullback to the fib line and a quick bounce. The question is, did we find an entry point on Amazon today? We pushed up, we failed, we came back up, we closed right there. We got a quick bounce right in there. So let's see, that fib line is at 222 and 3/4, we're going to call it 222.78, right? So I'd be looking to get in at $1 above there. So not here, we never really got it, but we've got to look at the 1 minutes in there and see, did anything lay out on the one for Amazon? So let's go and scroll back a little bit earlier today. All right, so we ran up, we pulled back, we closed right there. We ran down, we came back up. Now we closed here at 222.7. I'm sorry, we had a fib line at 222.78. We closed on this candle at 222.69. 69 from 78, 69, 9 cents, 9 cents, 10 cents. 10 cents. We closed right there. So as far as I'm concerned, we closed at the line. We push up, right? We get our dollar up above. So at 23 and 3/4 is the entry, right? Now, was it a great trade today? No. It wasn't, or hasn't been, right? I mean, we get in at 223 and 3/4. Guess what? It's at 223.86. We're right where we started. We have not made a penny on it. It's actually we're underwater between the bid-ask spread and time volatility deterioration. We're underwater on it. Okay, but we call it, or it is called trading, not winning. All right, it's trading. You're going to have ones that go against you. It's all part of the game. You don't have a choice, right? The only way you're ever going to get winning trades is take some ones that go against you too. And believe it or not, if you can get really good at analyzing what goes wrong with your bad trades, you'll become a much better trader for it. And I mean much better trader for it, okay? All right, so these are the ones from today. Guys, if you're not subscribed to Trade with Rob, you should be. It is free. Not a big trade, but on July 3rd, only one of our 3 trades. That's about what happens. We get 1 out of 3 on average. It was a small win for us. We got in at 213 out of 214. It was a $72 profit. We do 1 contract. So if you're doing 10 contracts, you had $720. I would bet most of you could stay home from work if you could pull in $720 a couple days a week. All right. So, but 1 contract just to show, hey, this isn't crazy. We don't need lots and lots and lots of money to do this. So this was on Thursday. I might have said Friday. So used to Friday being an actual day instead of like it was last week with holiday. So we're up $72 on average. We're $252.62 is the average over 48 trades for this year. Right now I've presented 150 trades and we've taken 50 of them. So we're take about a third. I mean, that's it, right at the numbers that I said. So looks like Andrew dropped a link in there to Trade with Rob, so you guys can register for that. Again, it's free. All right, let me just move this around. And then creme de la creme for last week was Pop. Crushed it. We are still in a trade on Goldman Sachs right now, right? So I want to show you if we look at Goldman Sachs right now, right? We're not out. Oh, we're getting close though. We're getting close. But if we look at $711.50, okay? So if we look at a 711.58, let's see, there we go. So if I put in $711.50, we'll call it 50 cents, not 58. I have 1 contract left, okay? Now watch, see that $5,362 right there? I'm going to put 1 contract in right now. We had 4 contracts originally. We sold 2, we sold 1, we have 1 left. If I put 1 contract right here, that $5,300 goes to $12,700. 1 contract. because we got in at 617 and we'd get out at 611. 90 some odd dollars on this position, right? Now we're not doing that. We didn't get triggered yet. We've got a trailing stop in place. I'm not getting out of it earlier. And I've got a stop in place, right? Not a trailing stop, but a stop in place. It's based on our 5-period moving average, right? But that one we didn't close. Nvidia, we had a nice swing trade on Nvidia. It brought in $1,900 on lousy stinking 4 contracts on this $140 stop. Right? Broadcom, BRCM, that was a $5,000 profit on 10 contracts. Booking, we haven't taken a booking trade in a while. Okay. And this week, we'll see it. It'll be on the our upcoming trainings. This week, we've got a Mastering the Trade, which is for everybody that's inside of Power Option Plays. In that training, we're going to go into all of the details and mechanics behind what we do and so forth. But we're going to go in and analyze some companies that we're probably going to get rid of as well, is what my goal is. And then add maybe some new trading companies in there. But Booking brought us in $7,800 on 4 contracts. MasterCard on 10 contracts brought in $3,000. And then XYZ, probably one of them I want to get rid of. We're underwater about $400 on that XYZ trade, right? So very small amount, but take the $5,000 out here and from 23,000 that we've got down there. So you're looking at 18 grand Tuesday, Wednesday, Thursday, of last week. So overall, not horrible. Those that are in Pop, you'll get an email today that says, because we did Pop, Friday was a holiday, I'm not going to do Pop today. I'm going to do it tomorrow. So this way, it just gives us a little bit of wiggle room that we'll have another day in there before we do our update, right? Just give you a little bit more trading days in there before we do the next one, okay? And then we'll do the regular one on Thursday again. So overall, it's been a good trading week for us. I am not disappointed one bit on our numbers, and I mean not a bit. Nothing about them. I'm stoked. Okay. So, hey Glenn. All right. So I haven't read what you wrote there, Gwen. I'm just going to read it, straight out. So Gwen said, "Well, I can let you know that it's a decent sized post. Well, I can let you know that I am much more strategic about taking my trades since doing Pop training. For the first time, wow. For the first time, I felt really deliberate about which trades I will take and not take, and also about observing my entries. I violated that entry rule once since the course and ended up paying for that learning experience." I love the words you chose. Very good. It has made me more observant and the clear and concise entry concept. Thank you. I did a trade on Thursday, made a small win, but it would have resulted in a loss if I did not know what to look for in an exit. So, Gwen, that is awesome. Congratulations to you. And I appreciate that it's, Pop has helped push you in that direction. But if you didn't do the work and you didn't put in the time, you're not going to get it. You're not going to see it. Right? Yep, there you go. A lot of kudos coming in for you there, Gwen. But and I love that you guys support everybody else that's in here, and you're thanking or appreciating that others are doing things and sharing like that. But realistically, folks, I'm telling you, right, whether it's Pop or whatever you're doing, you need to get a systematic methodology of what you do. I have laid so much of my life out into boxes where I go step by step by step by step by step. I'm reading a book, listening to a book right now. Hard to listen to on Audible. I listen at 1.65 speed, so more than 1.5 times, right, of the normal speed. 65% faster than normal, I guess, is the way you would look at it, or 0.65%, however it is. But and it's a great book. It's on being a millionaire, and I've listened to hundreds of books like that, right, or have hundreds of books like that. But this one has got a very methodical, if you're in this position, you're doing this. If your next stage up is this, you're doing that. Your next stage up is this, you're doing that. And it's a ladder. Actually, he works off of a lighthouse, a little pyramid-y type lighthouse, right? And I saw that in the accompaniment that he had with the Audible. But I love that step by step, and everything that I do in life is based on that. Guys, there's some new things I'm doing with my health that are all based on that. There's some new things that I'm doing with real estate that are all based on that. AI is crushing it for me on every single thing that I do. I've got some massive, massive, massive prompts that I have wrote. One of them that took me hours to write. And we may talk about it in Mastermind Group tomorrow, but we do that at the end of Mastermind. But those those types of things where I'm able to take a systematic approach to what I do, have I have seen drastic improvements in everything I do in life, whether it's trading, relationships with my wife, with my children, everything. Right? I spend more time with my kids now that and with talking to them and the likes than when they did when they lived here. Right? And it's just all about how I have become purposeful in what I do. Right? I've got a specific goal, purpose set in mind of how I want to approach something, and that's how trading needs to be. The stock is sitting right now, Goldman Sachs is sitting right now at a fib line. Let me zoom in on this. Let's get the entire Fibonacci, right? And so there's the entire Fibonacci. It's sitting at a Fibonacci. The market closes right here. You've got to ask yourself, what is my trade for tomorrow? What has to happen ideally? What's the trade you're looking for? Well, I'd like to see a small bounce off of there tomorrow. Maybe a gap up, a retest, and a bounce. That would work too. But something that gives me an indication that we're moving higher. Why? We're in a bullish bias. We're rank of 2. We're a true bullish bias. Right? So I love where we're sitting right now. But what if the S&P is down tomorrow? What if Goldman Sachs starts to move down tomorrow? It breaks that 711.49, retests and fails. Would you take the trade? Well, we can only move down to $700. So why would I say that? Well, not that you can't move further, but that's where I see it going to. I've got 700 level. I've got an 8-period exponential Fibonacci moving average rather sitting right there. It's a perfect place for it. Can it go further? I don't care if it goes further. Can it get to what I see? The answer is yes. So, Mr. Miyagi, best block, no be there. So, if you're going for that bullish trade and you can't take it, and you're off balance a little bit, what's the next thing you do? Now that someone threw a punch at you, which was market gap down, went the direction you didn't want it to go, how do you react now that you're off balance a little bit? How do you react, whether protecting yourself if you're in a trade or how to react if you're not in a trade? If we move down tomorrow on Goldman Sachs and I don't have an open trade on it already at that point, and we make a move to the downside, we come back and retest and fail, I'd probably be out of this right about 702 would be my target on this. I'd be up here probably about 711, right about 715 would be my stop ish. Okay. So do I have enough room to the downside? If I get in at 710, goes down to 7.2, I make $8 on the downside. If I get in at 710 and it goes up to 715 and I get out, I lose $5. So it's not quite double, but if I'm happy with those results, then I'll take the trade. If I'm not happy with the possibilities, the potential, then I walk away. Done. Done. That's okay. Well, Rob, that $8 is, that's tight in there. You don't have to take it. I'm just giving you an example. Right? That's the greatest thing about this. You get to choose what one you want to trade. Doesn't have to be the same as me, but you do have to choose. You do have to choose. There was a student of mine that started with me somewhere back in 2006 with the previous company I was with. When I left that company and started Wealth Builders HQ, they came over. Okay? At this point, right, this was 2017. It was amazing how many trades she had done from 2006 to 2017. And I know the exact number. 0. She came over to Wealth Builders. Stuck with Wealth Builders until probably about 2 years ago. So 2023. Right? I know the exact number of trades that she has taken since 2017 to 2023, and it is 0. And when I say trade she's taking, I'm talking about non-funded. She's done nothing with trades. Dug in, love to learn, love to be educated on it and so forth. But and listen, there's some people like that they're not trying to kill things with it. They just really want to keep their brain rocking and rolling, and this is how they do it. That's fine. That's fine. There are some people that are just, very scholarly where they're trying to learn. They're not really there to perform. They're there just to learn. And that's okay. And I think that might have been her. But had she gone ahead and practiced a little bit, non-funded, and she owned a business. Her and her husband owned multiple businesses, actually. And they knew what it was to make money. They knew what it was to pull the trigger. They knew what it was to take risk. They started their own businesses, okay? Um, she just never got, whatever the reason would be, the courage to pull that trigger to get this done, right? And you have to, or else you'll never ever ever progress if you're not pulling the trigger. So that's where that non-funded trading comes in. It's critical that you get, I mean, really really good at non-funded. um no, Brenda, no, not her. No, 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 no. She's amazing. No. Uh-uh. Brenda's just trying to guess who it might be. I don't know if you guys would know the person or not. Some do. I know some know exactly. Some that have been in the very high level trainings we've had with this person know exactly who I'm talking about. Um, uh, yeah. There you go, Brenda. All right. So overall, folks, we had great trades today. Good trades from you all. Thank you very much. Congrats to everybody that put in those trades. Listen, start hitting the enter button. I don't care if you know what you're doing. Wing it, right? Fake it till you make it, right? For right now, the fake it part comes in as you need to enter trades. Do them as all non-funded. What if it goes against me? So what? How are you going to learn? It has to go against you. I actually pray that your first funded trade goes against you. Yes, I do. You want me to lose money? I don't want you to get the experience of what it means that you are not invincible, that markets can do things that you are just not ready for. Right? I watched my stock go from $12.20 down to $2 almost overnight. And the market for the options and the stock were closed. So the premium I got for the covered call was great at $2. It was it was $2 for the covered call, 220 for the covered call. And I watched that $12.20 stock go down to $2 in 2 days. Well, the stock market was open. Stocks were open. The options market was closed. It was a covered call, so I couldn't sell the stock because I was encumbered with the covered call, even though the stock dropped from 12 to 10 to 2. Right? Nothing I could do there. All right. I was kind of stuck. So let's go back into presentation for a second. We'll get to our next segment, which is economic reports. Let's go hit those real quick. So we're going to go over to Forex Factory. We're going to expand right there. We don't have a whole lot, right? As of last week, when I did this over the weekend, Waller was not speaking on Thursday. So that wasn't even there. At least they didn't have it recorded. So 2 o'clock, FOMC meeting minutes, okay, on the 9th. Guys, whether you like the president or not, whether you agree with his policies or not, has nothing to do with anything. Beyond the fact, what I'm going to state is the president himself is totally against that we are not dropping rates. I don't know your opinions of it. I know Trip and I have had some good discussions about it. Overall, to me, with what's happening with housing and how much people are in debt and how much more credit card companies are racking up, I hope they pass that law that stops credit card companies from having these exorbitant credit card fees of 29%. Make one late payment, you go to 29% on your credit card fees. What? Right? Plus a $59 charge, plus we ding your credit, plus, right? It's crazy. We need to see rate cuts. And Powell is fighting those rate cuts. I think he's dead wrong. My opinion, I think he's dead wrong. Now, don't get me wrong. I don't believe we should be dropping back down to 2 and 3% right now. But I also don't believe we should have waited this long to even start a process of lowering rates again. You will see housing market, in my opinion, explode in two major ways. As prices of the mortgage rates drop, I think you'll see the properties start to go up a little bit. I don't think you're going to see them go up as much as people would like at first. Again, this is just one man's opinion. I think there's such a glut of inventory out there right now that when they lower rates and the buyers come out of the woodwork, those that have been trying to sell for a year or have just had to hold on to their homes, I think they're going to pull back a little bit. And the people that are buying, I think, it's going to be very aggressive. And if you really want to be in that front run, you're going to have to keep your prices lower. You may get a little bit of a bump from where you are today, but you're not going to be able to get a big push to the upside if you really want out now, right? And I think a lot of people really want out now. I think there's a lot of companies a lot of banks that are setting up for foreclosures on people, and they just, instead of losing their homes, they'd like to try to sell them. and they can't when they're already underwater with interest rates the way they are. No one can afford to buy it. It's impossible. So FOMC minutes, that is on Wednesday. That's at 2 o'clock. So you'll have some lighter volume through the day. And then unemployment report is Thursday at 8:30 a.m. So unless you're in a e-mini trade, it's not going to affect you unless you're on a swing overnight. And then 1:15, Waller speaks. I don't think you're going to see any where Waller's going to go against what Powell has to say. I don't see it. But Waller did say that if certain things were to happen, that they would consider Waller would consider changing his vote to drop rates. So I think we've got some things to look forward to, and I don't think it's going to take much. Give us 2 quarters, or 2 months in a row where we get a quarter point. I don't want big drops. I don't want to see half or 3/4 point. I think it's insane. We're going to disrupt the apple cart way too much, but I do think we're still way too high. Right? There is something that is called a carry trade. Right? People are literally borrowing money overseas where they can borrow money at 1%. They're bringing it to the U.S. and throwing it in bonds and getting 4%. It's called a carry trade. You're just carrying it over, and they're getting a really nice rate of return without having any risk whatsoever to those monies, because you borrowed it at a fixed rate. You're guaranteed a fixed rate on the outside. Why would you not? Right? Yeah, it's great. We bring some foreign money in here, but we need to get our own house in order, numbers wise. I think we're getting crushed with that. Brandon said new tariff fight starting up on the 9th, which is Wednesday. Okay. Yeah, Charles, amen to that, brother. There is no question. Tripp said, beware of inflation if wages and salaries don't go up with it. Yeah, I'm of the opinion wages have gone up more than they should have at this point. That's me. I think there are so many companies that are struggling right now where they just can't pay the bills with what they're getting hit with. Wages just went up if you have unemployment where you're not going to pay taxes on that first 20 federal. I think there'll still be state. I think there'll still be state taxes on it. But the federal taxes will be gone. So you'll get a nice little pay increase for that. I have a friend that probably does 100 grand a year in overtime. So he just got a big increase on a portion of it anyway, that he doesn't pay tax on any longer. Jim said CME Group shows a 95.3% of not changing rates on July 30th. Let's see how much pressure Powell gets in the next 3 weeks. Yeah, I agree. And Powell said he doesn't care what Trump says. He's not lowering rates because Trump says to. So, and it is his job. It is his position. Trump's not the Fed. So he doesn't get to make that call. Doesn't mean he doesn't have an opinion, right? And does it affect what happens with the overall market? Without a doubt. Is there a political side to that? Well, I'll leave that to you to decide. Demographic bomb, Tripp says. Boomers are 2/3 retired statistically. It will be another decade before we can catch up to the number of workers who have retired. Yeah. So without a doubt, and we just had this conversation from a medical standpoint this weekend when I saw my daughters, both of them this weekend, multiple times actually. But we were all at a block party together, block party graduation party at the same time for my niece. And my daughter was there with her husband. She's a nurse. He's in CRNA school, which is a nurse anesthesiologist. And we got talking about healthcare and what the future of it is and what they see and their thoughts from the inside looking out and what they're seeing now. I mean, look, I called a doctor, a specialist of mine, and I didn't have a need to see him, but something has changed and I wanted his opinion on something. And I called a month ago and they said to me they can get me in February. So I call in June. They said they get me in February. So I like the doc. I said, and I'm happy he's busy, but to give me 6-8 months out in advance to get an appointment, yeah, I'll need to hire somebody or do something, figure out how you manage your time better. Because if you can't give me an appointment sooner, I'm going to just go somewhere else. And that specialist, there's an entire department at Northwell dedicated to that. So I can go to that office and get an appointment in 4 days with that office, right? Again, I like this doctor. But that's the state of what's going on in the medical field right now. Medical is going to be a tremendous push. We just did, one of the videos we did on YouTube was on AI and companies with AI and war and where we see, some of the company. I'm not going to let the cat out of the bag, but there were three companies that we talked about in depth. So go to YouTube and start looking. I don't know if we've got it published or not yet. Um, but go and look at it, and we're giving you the numbers on these three companies and what we foresee on those, right? Big opportunities, AI, medical, but medical is a big one right now. Fed, you got to watch what they're doing, guys. Again, I think that we're making a mistake not dropping, but we'll see. Yeah, Trip said my doctor's group schedules physicals 14 months out. Yeah, and I get the same with physicals a year out. They want it scheduled right then and there. Um, I don't get it, that part, but hospitals in rural areas of the country will probably close. It's sad. Yeah, Brenda, it's scary, is what it is. People need the medical attention. I get it. And realistically, if I'm a doctor, my daughter and her husband talked about moving to South Carolina, and he's almost done with school now. It's like, if I move to South Carolina, I'm looking at making 100 grand a year less than I can make here. Do I want to do that? He said, I have a lot more autonomy here than I will in South Carolina. He's looking at some of the laws, I guess, for what he does. So do I want to do that? Right? I don't know. You won't pay the prices for the property, but yeah, it does cost a lot less, strip, but probably not 100 grand less is what he's looking at. For sure. But you are right. South Carolina is less. Actually, that's where my wife and I going on vacation to go look at property in South Carolina. So, all right, let me bring us back in here. We're going to go and look at the market. Come on. So let's go look at the S&P 500 and see what the heck is happening there. S&P 500, we hit an all-time high. 2 days later, all-time high. 1 day later, all-time high. Oh my God, we're pulling back. Yeah, okay, that's fine. Look at the run we've had. We need the pullback. I want it to pull back. I'd love it to last more than a day. I don't want this to be a one-day event. I'd like to see another close where it is, bounce a little bit from here. I don't care, but just close bearish today. I'd love to see it tomorrow have very small candle. I'd like to see the 8 catch up. Maybe one more day, 2 more would be great. Pull back, bounce, and take off from there would be wonderful. But we want stair steps. We don't want Roman candle fireworks. Roman candle, you shake that tube and the firework goes like this and falls like that, right? Stair step, which is what I want, we're going to move up and a small retreat. A move up and a small retreat. A move up and a small retreat. Move up and a small retreat. That's what I want to see, right? Don't worry about angle here. You get the concept. That's a little bit of a sharp of an angle for me. I like angles like this. That's a good angle. This here is a little bit too steep for me. Yeah, nice trend. Yeah, would be great if we can get that. I agree, Brenda. But I'd like to see the pullback first for a couple of days. That breakout one day, or pullback rather one day, and then bounce off there. It's okay. But it's like this. People say, "Oh, that was a pullback." No, it wasn't. It's just a rest day. That was the S&P woke up that morning and went, "Woo! Bad night's sleep, baby. I'm gonna take it easy today." That's all that was. There was nothing special about that at all. Nothing special about that at all. Jeff said my daughter did a residency in South Carolina. Public hospital did not like it. Moved back to Phoenix. There you go. And that's what he's looking at. Is he doesn't with what he's doing right now? He's going to crush it in his field. Let's see. Jim said I looked at your trading clocks time zones today for SPY 5-minute chart. The 3 yellow areas of possible reversal times were really close today. 2 are off by 5 minutes and 1 was spot on. Yeah, there you go. There you go. The clock works, right? We haven't found a viable supplier for it right now, so we don't have any in stock, but it does work. Yeah, sell in May and wait, but it back. Yeah, and that sell in May and go away stuff is fine, but I think you can make money every month. That's an investor to sell in May and go away type thing, but you can make money every single month. So where do I see it going to? Down to that 6204. From there, it's 6,300. That's our next upside, right? And all we're going to do is continue to mark all-time highs as we get a pullback. So we had a pullback now. That was an all-time high. Mark it, right? I'm actually going to pull that back just a little so the wick stands out. That dot was kind of covering and I couldn't see it. So that is our all-time high right there, right? If we break it, awesome. So now we got 62.8465. 62.9980 and 63.03. So as far as I'm concerned, 62.85 and 6303. That's my blue zone right in there. So I just go grab a blue box right there. That's my blue zone. That's the resistance we're dealing with right now. Three different resistance areas. Excuse me. Three different resistances that we have to contend with. Okay, on the upside there. Downside, you know where I want it to go, 6204. If we break out, which is very possible, there's that 6402 is our next one. Right? And then 6504. It's 100 point levels without putting 100 point levels in there. We're just stacking right up on it. Ah, I was going to try to drag it out, but I'm just not having any luck. Okay, beautiful. Let's bring it back into the presentation. Okay, so tonight we've got Inner Circle, July 7th, 7 p.m. Trading You is at 8 p.m. tonight. Mastermind group tomorrow. We'll pick up on our next topic. Mastering the Trade, July 9th. That is for everybody that is in power option plays. Wealth with Spreads for Q&A is on the 16th, so next week. Power Hour and Trading Coaches Playbook are back on regular schedule. Friday we're open again because of the market being closed. Power option plays, covered call, and E-mini are on regular schedule, except that I said already tonight we will do pop tomorrow instead of today, instead of tonight, because we just did one on Friday for today. So at least we'll have a second day in there of the analysis overall. Alex said on SPX, it's neat how the 100 point levels are close to the current fib lines. Great confluence. Exactly, Alex. I love it. I love it. Right? Dog Days of Summer. Guys, this is everything about Dog Days of Summer is all about resources, free resources to help you all become better traders. If you don't already do so, you're going to want to make sure you're hanging out on tradinglikeaboss.com. You'll see a bunch of emails come out on the various tools that we've got available for you. Some new, some we've had for a while, but you definitely want to check them out. I mean, they are there to help you. Whatever we can do to help make you a better trader, that's what this is all about. That's what these next week or so is all about. All right, weekly training topic. Yep, and Andrew just dropped in a link to Trading Like a Boss. With all-time highs, which index should you focus on? And there's basically four majors, right? You've got the S&P 500s, you got the SPX, you have the NASDAQ. You've got the Dow Jones Industrial Averages, DJIA. And you've got the Russell or the RUT, which is the Russell 2000. Very big index as far as the number of stocks, small cap type companies in there, very low price. You know, the Dow is all massive blue chips in there. There is some repetition between 1, 2, and 3, right? In there. So yes, you definitely have some that fall into multiple categories. But when it comes down to which one should you focus on, I'm going to eliminate these two right now and say they're gone. They are not ones that we want to focus on at all. The two on the top, and don't get me wrong, Trip trades IWM, which is an ETF of the Russell, right? He trades the diamonds, he trades Qs and spiders too. But they trade a very specific trade setup for a very specific purpose. I'm looking at what index do you want to focus on? You've got that leaves us SPX and SPY. I'm sorry, SPX and NASDAQ, right? Those two indexes. Each of those indexes to me have value. The thing you've got to look at is on SPX, this is all are represented here, right? Where on NASDAQ, it's very much tech. Now, it doesn't mean one is good or one is bad. It just is. You just have to know the rules to play the game, right? I can play any game if you teach me the rules. I'm really good at it as long as I know how to play, right? So when I look at these two, which one is better for you? The answer has to come from you, and here's why. You've got to ask yourself the question, what am I trading? Are you trading stocks that are pure tech stocks? If you're trading, so if we look, right, let's go back over to my pop stocks, right? For me, I like Adobe a lot. I like Amazon a lot. Broadcom. Booking is getting harder to trade. Coinbase, I love it. Costco, CrowdStrike, yep. Goldman Sachs, I've never had a lot of luck personally with it. Eli Lilly, no. MasterCard, yes. Meta, yes. Netflix, yes. Nvidia, I love Nvidia. Tesla, oh yeah. Right? Well, I got 20 stocks on here, 22 symbols. Let's get rid of SPX out of there. And I have 12 of my 20 positions checked off. So now I look at those stocks, and are some of these stocks in the S&P 500? The answer is yes. So actually, if we do it this way, let me clear that off. Yeah, it's just reset alphabetically. So um, Adobe, Amazon, Broadcom, Coinbase, Costco, Home Depot, MasterCard, Meta, Netflix, Nvidia. Forget SPY for now, Tesla. Okay. And I got 10 stocks in there. Okay. So let's say those 10. And now I cut it down to where I only had half, right? It's half of my candidates. There's 20 candidates in there. Okay. So if I look at this, are all of these in the S&P 500? Well, if we go back up and look at the S&P, let's see, instrument of S, right? You got a pre-made filter. Nope, why am I not seeing it? It's because I'm still on the RR. There we go, S&P 500. Okay. So I had 10 stocks. If I come down here, every one of those 10 stocks are in the S&P 500. Now, if I switch this over to the NASDAQ 100, yeah, the NASDAQ 100. That's R. Keep going. NASDAQ Composite, right? NASDAQ 100, close enough, right? So of those stocks, 8 of them are in the NASDAQ 100. So I am very close to those. So I had Home Depot and Costco are the two that were probably not in the NASDAQ, right? Not in the composite or in the NASDAQ index. But if you find yourself and you're trading pure AI, pure tech, then NASDAQ might be a better index for you to follow. If you find that you're trading more of the Costco's and the Home Depots of the world, retail, where you're trading more oil or something like that, you're trading more medical, more defense, then NASDAQ is probably not the index for you. If you trade like I do, where you are a mix of multiple, even however small be it, I really do believe the S&P 500 is the one for you. Now, can you check both of them? You can, but you are going to have days that there are differences. There was actually a very long time where the markets, when I say the market, the S&P 500, the Dow would be down and the Nasdaq would be up. And we would say the Nasdaq is an index of a market of its own, an index of its own. It has its own brain. Eats, drinks, sleeps the way it wants to, right? Doesn't react like the rest of the markets do. Crashing down, and tech is taken off. Why? Because tech was prominent at that point. Didn't matter. All right, didn't matter. I don't know what you typed that in for, Trip. Sorry, I just realized now. So follow the index to the stocks that you tend to focus on the most. If you're broader, meaning you're in tech and non-tech, then go with the S&P. If you're pure tech and you do nothing else, then you might want to focus on the NASDAQ. But the S&P is still the index that traders focus on. So just something to FYI. All right. One more shot. Your stocks. Drop in the candidates that you would like me to take a look at. If you can tell me why you want to look at it, it'll make it easier for me to answer you. If you don't tell me that, it's okay. It'll still work. Okay? I'll still be able to analyze the company. But if you say you're looking at a bullish trade, I'll be able to come up with a more specific answer to what you're looking for. If not, just drop in symbols and we'll go from there. Right? Cisco, is that Rick? I figured. Hey, Rick, how you doing? SYCO is who you want, right, Rick? No, I'm kidding. CSCO, not Cisco Foods, right? Let me make this a little bit narrower. So I definitely have, see, that pullback was premature when we drew that fib, right? I'm going to say we probably belong here because of that. We made that pullback right to the 764. What? Why is that like that? Let's try something. Let's go back here. So we're going to get rid of this. We're going to come from this bottom, Rick, up to this, up to this top, right? So I don't know why it's giving me the fib lines on the opposite side of where I want them. I don't know why it was drawn that way. I think we just pulled something from a different direction over. That's what I'm looking at. 65 and 3/4, 67, 9, 3 1/4. We need to split that in half, 63, 4, 5. Okay. We need to split both of them in half, Rick. So we need negative 136 and a 118. Okay. Same for you. Yeah, the same thing, Rick. Excellent. Good. Good. All right. Netflix. You're welcome, Rick. Netflix. Here's a trade recently on Netflix. We did 4 contracts. We got in at 13.29.5. We got out at 13.39 on the 4 contracts, up 29.64. So upside is tough because the 1300 is right there. It's way too tight. We move 25, 26 points a day. No, 25, 28 points a day, right? So it's tough to the upside. Downside, I've got room to the 21, but overall not too shabby. SPY. All right, so I love where SPY is right now, Brenda. So if we can close right there and take the bounce from there, life is good, right? 628.80 is our next upside target. We're at a bullish bias rank of 1. And if it does break to the downside, at 607 is where it goes. But I like where we're at right now. QQQ, and this will be our last one. We're kind of in the middle yet on QQQ. So I'd love to pull back to the 548 level. If we get that in bounce, rock and roll time. Rock and roll time, right? So, all right, everyone, there you have it. Appreciate all of the help. There's a lot of links in the chat box in there for today. So you got the newsletter, you've got the Trade with Rob, you've got the Dog Days of Summer. There was a link in there for power option plays. Guys, check it out. Look at the different tools. Check out all the free tools and take advantage of them. With that, have a great rest of your day. Make it a profitable one, and I will see you all at our next update. Take care, everybody. See you soon. Bye for now.